All right, guys, welcome back for another video. In today's video, I want to do a very high-level view of Bitcoin because we got the quarterly open coming up. So Q3 is coming to a close today, and then October 1st is the beginning of Q4. That's very important from an institutional perspective. I've covered this topic, pretty extensively in previous videos, but it's worth revisiting because it is very important. A lot of institutions, they base their P&L off their quarterly reports. The quarterly reports are the reports that they bring to their board meeting every 4 quarters. There's 4 board meetings generally every year for most corporations. So they shore their numbers up and tie their numbers up. It is very significant, and it's something that's significant that scales with institutional involvement, right? So we wanted institutions to get into Bitcoin and to be more involved in Bitcoin, and now they're here. And to the extent that they're here is the extent that quarterly opens and closes will be more important. So really the carryover effect of that is that when you get your quarterly open and close, a lot of times that's an area where the trend will come to an end, right? Or put in a different way, the trend has the least amount of significance around a quarterly open and close. And the reason for that is because these areas typically serve as excuse me, as pivots on the market. As because the institutions are taking serious profits and hedging their numbers going into that quarterly P&L. So it's generally a place where um, institutions take their wins, lock in their wins, and then kind of step back. And the period in the beginning of the next quarterly open is a period where they don't have a lot of risk allocated right off the bat, although there may be a willingness to add risk, but it's more of a period where, they're watching, waiting, seeing what's happening, and then responding to the market as it's unfolding rather than, demanding a certain outcome. And that's the reason why it can generally serve as a pivot. Now, I'm going to go into the daily and show this, show that very succinctly with different examples, but I just want to start out on the very high level. And you're probably wondering what this EMA 16 is. Well, there's this interesting graph I've got here. This is the Bitcoin, basically the 4-year moving average. So if you do a 4-year moving average of price, this is what you get on Bitcoin. Now, of course, if you're looking at that, you know, um, you may be thinking, wow, this is the most bullish asset ever. Well, it is the most bullish asset ever. Actually, Bitcoin is the most bullish asset ever, but it does have a lot of volatility, right? So it doesn't feel that way all the time. Now, it'd be nice if Bitcoin moved like this, right? We could just buy and feel great the whole time it goes up. Um, but it is a volatile asset, so we need some type of strategy to deal with the volatility as the volatility is expanding, right? We need some way to dampen its effects. And that strategy is different for everybody, right? There's no right way to do it. But the idea is that you want to look at this chart and have, form a bullish bias on this asset, right? Because it just goes up, right? If you're consistently bearish on Bitcoin, you're setting yourself up to lose money because the asset itself is inherently bullish. And unfortunately, their bearishness tends to peak at the absolute worst time, right? Like if you see a 4-year moving average on an asset that looks like this, right? Not only do you want to be bullish consistently, but the worst time to get bearish on an asset that has a 4-year chart like this is after an 80% correction. You're almost setting yourself up to sell at the bottom before either a return to a mean, the return to the mean being the 4-year moving average, or a return beyond the mean and a parabolic advance above the mean. But for the purposes of this video, I want to, you may have heard the concept of return to the mean or return to the average. And I want to make the suggestion that the 4-year moving average is the mean, or a good way to look at the mean in terms of Bitcoin. And another way you can represent that on the 4-year is the 16 the 16 EMA on the quarterly, right? Because quarterly is a fourth of a year. So if you're looking at a 4-year moving average, then 16 moving average on the quarterly is going to be the same number, right? It's going to be the same data relatively. So we can look at that here. So now if you're looking at the quarterly chart since inception, you can see that there's really very, very, very few examples where if you buy after a quarterly down close, that it was a bad decision, right? Very, very few examples. And, a lot of times, even if you buy after a quarterly down close, even if, you're buying the top of the market, you're still buying an intermediate term swing, right? So if you bought this down close here, um, you could have sold it 3 months later for a pretty decent profit, right? It's still there. Like, and if you were to go down to a daily chart, that would be an incredible amount of time, right? 3 months from this quarterly down close to this quarterly up close. So you can see how that even it doesn't look like a pivot when you're zoomed this far out, but if you were to go on a daily chart, this would be very clearly defined as a pivot. There are some examples where it doesn't work out, right? Like here's a good example where this would not have been a good buy. But if we go through the different, even here, this down close still would have been given you an opportunity to take a decent long trade, right? You got the down close there, it moves up from 6,700 all the way up to 9,000. That's rough, almost 50% increase. You pull in profit. But what's really significant here is when you get the down closes around this 4-year moving average or the 16 EMA on the quarterly, right? You get a down close into that mean, right? And then you get your quarterly pivot, and these are the best generational buying opportunities, right? They're because you're going to you've returned to the mean, and then you get a quarterly open, which is the historical area where price will pivot, and then you get a pump up, right? And then you return to the mean. There's a good buy right there during 2020. Of course, it doesn't feel like that at the time. If you're looking at a quarterly chart, right? Most people are not looking at quarterly charts, but if you do zoom out that far, then things are much more orderly and much more structured, right? The lower the time frames you go, and the more short-term volatility you look at, short-term volatility is more random than long-term volatility, right? Long-term volatility embraces more concepts of game theory, supply and demand, things that are measurable and very predictable, right? Game theory is extremely predictable over the long term because it necessitates that market actors act in their own self-interest. And that's something that is very reliable over the long term. Now, in the short term, it's not as reliable because of human emotion, right? People will actually act emotionally in ways that are against their self-interest in the short term, right? And that's why you can see that in the price chart. It's reflected in the price chart as, short-term volatility being more random than long-term volatility. So something to keep in mind. If you are day trading, right, you don't want to fall into the notion that you can predict which way volatility is going to expand, right? On any given day, nobody knows which direction volatility will expand. And I know that might seem like, um, you know, heresy to say to some people who trade, but it's just objectively true. Anybody who claims they know which way volatility is going to expand on any given day, they're lying to you. There's no way to know that. Now, the further out on a time horizon you can get, actually, the more predictive you can get in your predictive quality. So that's really where you can implement a long-term strategy. And then you want to incorporate, as in your short-term trading, your hedging, your scalp trading, that's the area where you want to incorporate less of a macro narrative or structured strategy and incorporate more elements of randomness. But anyway, you know, now we're returning to this mean on a heavy down close candle. So we didn't get the quarterly pivot following that, but we're actually going to get. So we had the second quarter from April down to July, and then we had the July open to October. Now we're getting the Q3 close, and the Q4 open is coming very soon. So again, there's no guarantee that, Bitcoin has to, do a pivot here, but I'm just going to run through different quarterly pivots on the chart just to kind of show exactly. We'll go to Coinbase chart. Let's see. So you can see my position on here, 429 Bitcoin from the FOMC lows. Let's take this off the chart. Now let's put the quarterly open. So today is the quarterly close, and we'll get a quarterly open tomorrow. I'll mark off the July quarterly open here. So here we had very peak capitulation. We can go here. You see this period during June 2022 had the most realized losses in Bitcoin during any 14-day period in Bitcoin's entire history, even if you were to go back further than this chart. Capitulates down there, capitulates into the quarterly open. Then you get your Q3 quarterly open, and what happens there? You get a change of behavior, right? The downtrend is starting to turn around. Rather than running for the lows, price starts running for the highs, right? It starts taking out this high right here, and then comes down and defends this low right here, right? So it's changing the trend after that quarterly open right here. It does that right there, and then it continues this trend, creates a new higher high, defends the lows, higher high, until breaking the trend right here. When this low is broken, then you got your trend break, and then it tests back up into that market structure break, and then a resweep of the capitulation lows. Now let's just go through it and kind of mark off, just for the sake of seeing it. Let's see. April 1st would be Q2 open. Now there are some times where this doesn't work, but here's a great example of how it works, right? You had this uptrend building right here, right? And then uptrend, downtrend comes down here, and then you take out this high up here, defend the lows, and kind of wedge into volatility contraction, and then take out the highs. So you're creating this uptrend into the quarterly open, and then you get the quarterly open, and you get a dramatic downtrend, right? It's totally different than what's happening here, right? So if you had said, this is where trend traders can get into trouble, right? If they don't respect quarterly pivots, right? Then in their mind, their bias is based off here, right? And they're just not incorporating the possibility that there could be a dramatic pivot that's totally different from what they're expecting. So let's just run through it. Quarterly pivots are significant even in times when they're not totally significant. A good example is right here, right? So you have a quarterly pivot where it doesn't necessarily lead to an immediate uptrend, but it is still very significant, right? You do get a little bit of a continuation until the trend kind of bottoms out here and reverses. So it wasn't an immediate pivot, but even in that scenario, you still had a significant level, right? You had your quarterly open right there, and then when price does retrace to that quarterly open, you see a test off the quarterly open, right? And then so it's a very significant level. You could have traded that very well, right? I mean, it comes right up there without passing it at all. Let's see. Then the next quarterly open would be previous October. Yeah, so right here. Okay, so price is coming up here. You're getting a downtrend, right? Remember, you objectively have a downtrend right here, right? You have a new low here, and then a lower high and a lower low, right? So you got your lower high, lower low. People are looking at this. They're saying, okay, we have a textbook downtrend right here, but then you get a quarterly open. And what happens there? Well, you get quarterly open, your quarterly pivot, and price just runs the exact opposite direction of the established daily trend. All right, let's go over here. So here you had a little bit of more of a Wyckoff formation, but price had crashed down into that level and entered an accumulation pattern where you get a liquidity run above, a liquidity run below, and then a sort of drift down. Sometimes in Wyckoff accumulation, sometimes price doesn't take out these lows. Sometimes it does take out these lows. So if you are studying Wyckoff patterns, you don't want to use this area as a stop loss, right? Because It's not necessarily an invalidation. Some Wyckoff patterns, do this first drive and then the third drive. Again, that's a little bit of a nuanced topic, but the point of this is that we got the quarterly open, right? The quarterly open, uh, all the trend traders are looking at this trend behind them and thinking, okay, this is a very dramatic downtrend. I'm going to get short. Well, hopefully they took a little bit of profit here because the quarterly open didn't pivot right away, but it did, the larger context of this quarterly open, right? If we map the open to the close, right, you have your open here, your close over here. It's not, this quarterly candle is not defined as a downtrend, right? You, on the big picture, you would have to define it as a pivot, right? It's very different than the price action over here, right? Quarterly open, a little bit of a rundown, and then a pivot. Now let's see what's happening over here. Okay, so here's another great example. So you have your quarterly open here, Q2 2020, 2021, and then you get one last thrust above this level right here. This was when Coinbase went public. This is really your market top, right? The market top started in April 13, 2021. Now you got to throw over there in later of November of that year. But if you look at the RSI, I would really put the argument that the Coinbase IPO was the real market top. And you get this quarterly open, Coinbase IPO, throw above these highs right here, and then you get your quarterly pivot, right? Come down, break structure right here, run up into a bearish 618 after breaking structure, and basically capitulation. So very, very characteristic pattern right there. Let's see. This one might not be as good of an example. But sometimes it's best to look at, the examples where it's not the best example, right? So here you have a quarterly open, right? Q1 2021, where, you don't have a pivot, right? It's not a good example of a pivot, but you do have a little bit of a stalling period around that quarterly open. A lot of times you'll see that, right? Even if there's not a dramatic pivot, a lot of times you'll see some type of change of behavior around that quarterly open, right? In this case, price kind of stalled a little bit from its parabolic advance, contracted, and then resumed the trend into the quarterly close. Let's see what we got here. So here's a good example of a quarterly pivot, right? At this point, you do have a downtrend forming here, right, on the daily chart. You have a lower low here relative to this low, a lower high here relative to this high, and another lower high there relative to that high. So trend traders are looking at this and saying, this is a downtrend. I'm going to, get short here, but they're not respecting the quarterly open. So you get your quarterly open on October 1st, 2020. And yes, there's a downtrend here, but we have an institutional pivot and price goes parabolic, right? So trend traders, got screwed. Hopefully they manage risk. But anyway, I hope you guys found this interesting. It's a very nuanced thing, but I think it is really effective if you can learn to implement it in your trading methodology effectively. And it's always really helpful to reset your bias, right? And to take a step back from the market and say, hey, maybe the things that are making me bearish or bullish, maybe they were relevant at one point, but maybe they're not as relevant now. That's always helpful to do, regardless of if it's a quarterly pivot or not. But really, the best time to do that is around the quarterly pivot. So, we got the quarterly pivot coming up tomorrow, or excuse me, the quarterly open doesn't necessarily have to be a pivot. But whether it's a pivot or not, it's still a good time to take a step back from the market, reassess, maybe take some risk off, spend a week or so in risk-free environment. That way, your mind is more able to perceive the market objectively when you don't have as much risk on, and then you can always put the risk back on, right? And reassess if something different is happening, as it tends to happen around these quarterly opens and closes. Anyway, I hope you guys like this video. If you haven't subscribed to the channel, please subscribe, and I'll catch you guys